Today I'm outside a little bit for a slightly warmer weather than what we've been getting. So please pardon the occasional airplane and I will try to edit that out if I can. But today I want to talk about market manipulation. It's not by the uber rich or what most call the whales. They actually have no real power, even with all their money, to cause Bitcoin or any other asset on the market to drop 30% or more. They simply don't have that kind of money. No, market manipulation is actually nothing they can control. The ones that do that are us. The retail investors. Bad decisions, fear, panicking, all of that combined is what can cause Bitcoin or Facebook or Google or any other asset on the market to plunge. We are the driving force of market manipulation. You may have some manipulation on one single asset, but something as big of a volume as Bitcoin is beyond that scope. So that is the reality that we need to face as retail investors. We actually control it. And that is why technical analysis is so important, and not letting fear, uncertainty, and disinformation cause us to panic. And that has been rampant lately as you look at BNB or the Binance coin. When that little hit job came out about them being raided by Chinese police, it hurt the market and it had a major impact on it. Not because the whales sold their assets, they don't care, but because all the little guys that can't afford to lose our money, we panicked. And a lot of us panicked in a big way, and that really hurt the market as a whole. Even with all of the technical analysis, many investors let emotions drive their decisions, and that's the worst thing they can do. You cannot let your emotion affect how you trade. You have to keep your emotions in check, and you have to rely only on the mathematics of technical analysis. And this can be proven simply by a paper trader. Let's take Binance Coin. I've got $1 million to play with, though I wish. I'm going to go buy a $10,000 position at, say, $16. I'll put my limit in. When it fills, I'll be notified. Okay, after that, I get that notification. I'm going to put, say, a 10% take profit on it. A limit order I put right in the exchange, 10%. So I'm going to sell it when my position is worth $11,000. That's it. I put it in there, I walk away, I forget about it. And it just does its thing. I've got $1 million to play with. I'm not going to worry about 10,000. And that's the whole point of all of these whales. When they make their investments, they don't watch them every day, whether they go up or go down. They simply put them in, place their limit orders, and forget about it. And even now, with most modern exchanges offering conditional trades, where you can buy the asset on a limit order, and it simply sits there and waits until it happens. And then it places a conditional order after the fact that sells it also with a limit. So they can place one trade, walk away, forget about it, and it does everything. Both the buying and the selling happen automatically on the exchange. They're done. So they put 10,000 on Binance Coin. Put 100,000 on Bitcoin. Does it matter? No. Not to them. It matters to us. The people that only have 1,000, 10,000, or even $100. We worry about what the market does each and every day. And we are the ones that cause the biggest problem in the market. because a lot of retail investors, the little guys, panic. And when they panic, they lose money and they hurt themselves severely. And there are literally hundreds of thousands of them worldwide that panic over nothing. The panic is understandable for the small budgets. They can't afford to take a hit of $10,000. They can't afford to lose half their budget. So while it's understandable, it's a problem. And it's a problem that we as the retail investors need to address. We drive the market. Places like Coinbase know that. That's why they charge us the highest level of fees. Coinbase charges a 1% maker fee and a 1% taker fee. Why? Because we are the ones that are going to make the most trades. We are the ones that are going to be spending the most money in and out of the market as fast as we can. Not the whales. The whales can sit there and wait a year for one position to mature, and it's not going to affect them. It does affect us. And the automated crypto markets, the trading bots, they're the perfect reason why we make these decisions. When you have a subscription that costs you $20 or $100, right off the bat each and every month, you are in the red. And you need to be able to make that up in your trades. So if you take a loss of half your budget on top of the subscription, that's going to hurt. And that's the reality of trading. Bad decisions make for bad outcomes. And sometimes good decisions make for bad outcomes. Even with all of the technical analysis available in the market, it's still going to go up and go down like a roller coaster. It's going to oscillate. That is just the nature of the market. And we as investors simply have to learn when to get in and when to get out. And most importantly, the aspects that we need to follow are the basis of our mathematics. This goes back to emotion. Whether it's some hack job company putting out a false report on Binance being raided by the Chinese police, or whether the news reports that Facebook is facing an antitrust lawsuit. That hurts the market for people that get in and get out just upon this social nonsense. And that's exactly what it is, nonsense. The only way to truly survive the market and realize exactly what your profit will be is strictly through extreme and careful analysis of your portfolio and your risk assessment. For example, I personally never deal in tech stocks. I will not buy Facebook, I will not buy Google, I will not buy Netflix or Amazon. I refuse to, because they are too subject to social nonsense. I don't care about what Mark Zuckerberg does or eats for lunch, or what Bill Gates thinks about the world. And because people do, and they actually trade on this kind of idiocracy, it hurts the market as a whole. The stocks, the investments I go after are utilitarian. That is, no matter how much you hate your electric company, you still have to pay your electric bill. No matter how much you don't like a hospital, or you don't like your hospital bills, when you get sick, where do you go? You go to the hospital. So hospital real estate is prime targets. This is how you have to look at your investing. Not by the political winds that shift like a pendulum. Presidents change every 4 or 8 years. My portfolio has to last 30 years. I can't have my portfolio based upon the whims of the current market. That is the reality of investing. So always make sure you test extensively what you are trading. You need to always be aware of the market and always be aware of your risk assessments. They will change constantly. You will need to change your strategies constantly. Don't be afraid to take a loss once in a while, but always be aware that every time you take a loss, you're going to somehow figure out a way to make it up. There are no easy solutions to planning your losses, but blaming the whales isn't the way to go. Blaming the rich isn't the way to go. Claiming market manipulation isn't the way to go. Because you, the retail investor, me, the retail investor, we are the ones that make the market move one way or another. And that is the sad reality that people need to realize when they get into trading. We are the driving force. Not the few handful of rich people, but the people who trade daily. Push those candlesticks up and down every 5 minutes or every 1 minute. We are the ones driving 90% of the entire market. And we need to be aware of what that means for our portfolios. As I say, the political pendulum always changes. I can't afford my portfolio to go through that. And that's the same with most people. The retail investors need to stay focused. And with that, always be aware of what your portfolio is and always focus on your risks. Know when to get in, know when to get out, and know when to simply change your strategy. Not always easy, but it's something you have to always watch. So until next time.